Hey, it's Mac with PriceActionTradingSystem.com, and it's Monday. It's May 13th. This will be our chart lesson for today. And um, interesting day. Another very high volume, volatile day, mostly all to the downside. And I mean, we traded down to 2,800 today, and it wasn't just a few days ago. We were almost at 3,000. So there's been a huge sell-off. We probably needed a correction. We'll just have to see if this correction continues or if we're going to bounce from here. At some point, we'll probably bounce and we may go to new highs again. That's how it usually works. So it wouldn't surprise me if we don't find the bottom here soon and rally for a little bit. Even if we're going to continue to go lower, we're probably going to rally here at some point. So just be prepared. You could have some days where it's down this hard and then rallies just as hard. So it's hard to these could be hard days to trade. It's all downhill, so it's really just a matter of finding the right place to enter. And they move quick, so if you get it wrong, you find out quick that you're wrong. And if you get it right, you find out pretty quick that you got it right. And a lot of times you can catch some really good runners on these kind of days. So I would definitely, if you're with the trend, I'd definitely be trying to get some runners. And you'll get these flat spots. It'll get oversold and it takes a little while to catch up, and it might bounce a little and then it takes off again, and then you see we bounced here in the afternoon and then we're selling off again. And that's kind of how it'll work. I mean, the market will get oversold quickly on days like this with this hard a sell off. So just keep in mind that really there's probably other trades here that I could have marked that you could argue for to say, hey, why didn't you like that setup, or why did you like this setup? And it's so volatile and there's so many setups, and a lot of what we do is subjective, as I always say. You want to be with the trend first of all, and then some of it is how much risk you're willing to take on. There's usually more reward for more risk, but at the same time, when you take on more risk, you need to be really good at it, because you'll probably have more losers as well. So some of these that are green could be real close to being red. Some of them that are red, for some of you, you may see it as green. So don't let that bother you. Don't worry about that. When it's volatile like this, you can get a lot of different setups, and your chart can look a little bit different than mine. And some of my signal bars that I don't like, I'm not comfortable with, might look great on your chart. And if they do, that's okay that you take a trade. So just remember. Anyway, let's go back out a little bit here, talk about the trades, and there's a lot of them. So, and like I said, there's probably others you could make a case for. So if you like one, you see one, you liked it, and it looks like it fits the rules, then don't worry about it. Just because I didn't mark it, my chart may look slightly different. It could have still been a possibility, and I felt it was better to wait or whatever. There's just no way to talk about every option and every opportunity. There's just so many trades here. It's ridiculous. So I mean so don't worry about it if your chart doesn't. If you got some trades on here that I didn't, then if it's really eating you alive, you can send me an email with a picture of it, and I'll tell you what I think about it. But when you give this much volatility and this much volume and these strong trends, you're gonna have that. So don't worry about it. Just don't. I know sometimes people just, it drives them nuts because they don't want to know why I trade. I didn't like it and they did. So, but again, it's not that big a deal. So let's talk about these trades that we have here. You had to be a little patient this morning, in my opinion, because the trend was relatively strong, and then it just kind of got flat here, and it looked like we were having an overshoot. So you had to be really careful getting short in here. 7 o'clock came in this little drop right here, and you do have a short-term trend line, and this is turning down right off of it. It's a little bit of a breakout pullback short as well. We just came off the high here. We did have a little bit of a break or close outside. It's not a really strong close outside, but it's enough to be semi-convincing. And then we drop down, so we're coming out. So you'd expect us to go to the low. So for that reason, you may like that trade. But we've dropped a little bit already. We've already got a new low in place. It's only by a tick or two, but we do have a new low in place. You're away from the EMA, but it is off a key entry point. and we aren't to the lows yet. So the problem is you're just going short basically right into the lows of the day. It is a breakout pullback short. It is off a key entry point. It is a nice small bearish bar. A lot of reasons to like it. So this could almost swing either way. I made it green because it's right into the lows of the day, and that's always a question mark. Always. Even when the trend is really strong, like right in here, going short into the lows, you can see could have cost you. And so you've always got to be leery of that. It doesn't mean you'll never take it, but it's always got to be in the back of your mind. We dropped on down and we just continue on here. There's no real setup. You got 3 or 4 bars in a row and they look like dojis, and you're already coming off the lows. Maybe this is a midline. You don't know yet. I don't think that turns out to be the case in the end. So, there's some reasons to maybe consider getting long again, but you don't want to do it right in here yet. You want some more proof or something else that says, hey, we could be going lower. This may just be a midline. And notice how we come back to the EMA and you get a second entry short right here, and you get a somewhat of a test of this support area or resistance area right across here, and we can't really get back above the EMA. Another relatively small bearish bar, so I like that one. But notice how we're just kind of bouncing down that line, and I just don't think there's anything else in there. You don't want to go short right into that. You got to have room to get out. This one is also a possibility. It does kind of gap over. There's no overlap. I don't know if you could have got filled on that. It's a lower high. It is a second entry short because you got that low, first entry, second entry. So it's a possibility. I didn't mark it. You don't have a whole lot of room there. I think there maybe is just enough room to get out. So I'll mark that one green. But there's going to be a bunch of these. So, I'll just probably make the comment that, hey, this is a possibility. You may have wanted to take it, and I'm not going to worry about going back and trying to market it. There's another second entry short right here. Notice that low, first entry, and then it backs up, and then second entry. But there's not much room right there, and you can see we hadn't got through there yet. And notice it bounces again. It wouldn't have stopped you out, but it could have, and it may not have ever dropped down here. So you got to be real leery of those. Even this little failed break lower here, this is you can see that's a clear sideways channel by this point, but we are making lower highs every time, and that generally is a good indication that even if we're not going lower, we're probably going to at least break through there. You can probably get a trend line off that. You can see that trend line right down through there, so that's a good indication we could go lower. Again, this is only like 2 or 3 little tick bar, a little bit away from the EMA. It's a failed break lower. It's one of those that, hey, it could be a major low, and it could be a good place to enter. But again, it's just really dangerous trying to go long in a downtrend. So I pointed that one out. Same thing, I'm not going to mark them all, but I'll just kind of mention their possibilities. Then we just kind of going sideways here. Stay out of this. There's a little double test right here. It's only a few ticks in that bar. It's a doji. It's another one that you might take. It is a second entry, so it's another one you could argue for. Same thing here. We did the same thing again, but by that time your lows are right here. If you've got enough room to get out, maybe it's another one you consider. I just think you're better off leaving all that alone. And then finally we get a big breakout. We get a lower high right here with a chance to get short right at the EMA. There's a little bit of trend line there. You could look at that just as a second touch, but it kind of confirms that trend line off those several bars there. You figure we're probably going to go back down to the lows here at a minimum. There's just enough to get out of that one, and then it bounces, and you wouldn't have got stopped out anyway, even if you took it and didn't get out. But I think there's enough ticks there that you would have scalped out. And then you get a failed second entry long with a nice bearish bar. So that's really the better place to enter. And you could really still look at that as 2 legs back. It's 2 measured legs basically and a big bearish bar. It actually broke higher first and then turns down. So you could have gone short 1 tick below. Let me try to make this a little bigger. You could have gone short 1 tick below that bar, but I'm okay with you going short. It is into these 2 lows, but it's off that key entry point. I like that trade, and look at it go. And I would be looking, I didn't show, I don't think, back here. I probably would have measured, I would have measured this first leg from here to here, and then looked for a measured leg down. And you can see, and that puts you down here, way down here around 2791 or 2, somewhere in that range. I don't know specifically. It doesn't really matter. It's way down there at this point. I mean, you see we're up here at 2830 something. So it's way, way down there. So it gives you a target if we continue to go lower to kind of shoot for. I don't think we quite made that today. No, we only got down to around 28. So we were close, but that's a big drop for one day. So anyway, we drop down and then we try to come back here. You can see we keep trying to come back, and we finally get a little two-legged. There's a second entry short right here, but this is really your signal bar. It's the highest bar in the swing. And this is just an inside bar. It's still got a little stem on the bottom, just not a very good signal bar. So this is really your signal bar, and you don't want to use an inside bar that's not even a good bearish bar. Still got some question marks. So then it breaks higher here, and you get a bearish bar. That's the place to go short. That little 2-bar matching low. If it breaks below there, it's probably going to drop on down. And I'd measure this leg and look for a possible measured leg on that. We didn't quite get that. That's a big move down there. Just to show you what it would look like. There's leg 1, and then you'd look for leg 2, which is way down here. And so we didn't get that, but anyway, that was another great trade. You would have had a runner there, one trade with a good runner, and you might have been done. And of course, now we've got a little 2-tiered channel working here. We work back, we're kind of turning down. This one was really tempting. It actually broke higher and turned down, but that's just so much sideways. You got some dojis in there, 4, 5, 6, 7 bars in a row. Even though that probably would have worked, I didn't mark it. It's just too questionable. Plus, you're looking for prices to come back up here. And then, of course, we run up there, and you get a nice bearish bar. Again, this is an inside bar, but being off that key entry point, it's a little bit different. And it is a second entry short. Notice that new low, first entry, second entry. So you may take that one. You could argue that maybe should be green but it's so far away from the EMA that you got to figure that's probably where we're headed back. And then, of course, you get a little failed second entry long and another turn down, and it actually broke higher and turned and went lower. That's probably the better place to enter, but I still like both of those because that's clearly 2 legs. On a bigger picture, that's 2 legs back and a second entry short as well. Lower on this level, it's a second entry short. It's right off a key entry point. This turn prices multiple times. It really kind of confirms it. This really shores it up right here. This one is really tempting as well. But now you got to go short into all of that support all the way across there. That's not worth risking. It's just not. I think you still would have scalped out of that. It's real close, but it's not worth risking. And you see what happens. It ends up bouncing. And that's why you got to be careful. What I talked about earlier, it's always a risk going short into support or long into resistance. Same thing here. Even though there's a failed second entry short, you're kind of going long into resistance. Of course, it's kind of like a little breakout pullback because we did get back above here. It's not as clear on the resistance off the high as it is the low there. And then we come back again. And there's a second entry long there too, but that's the first break of this big bearish channel here, secondary channel. And it's just not wise to be going long right into the highs. Of course, there is room to get out there. So that's another one that you could argue for. This one's it's too neutral, even though it kind of confirms that trend line. You definitely don't want to go long right there. This one is another tempting one. There is a little bit of a trend line working up. You see that trend line right there working up through there. There's no close outside of it yet. But you're way away from the EMA, and you get that little high and then a lower high, and then we tested it again. You may go short right there. It's one to consider, but because of that trend line, I'd be real leery of it. There are two legs up too. Notice this. That's two swings in one leg, then a correction, and then really there's two swings in another leg here. So you got two-legged correction, which is oftentimes the center of the correction. And so you may look for, if we start down there again, you'd look for probably a pretty good move down. So that may be a good spot to enter, but it's risky though. So it's another one that you could say, hey, maybe you make that yellow, or I'm sorry, yellow. Maybe you make that one green. I don't know where yellow came from. Excuse me. I have no idea where that came from. But anyway, you're moving down, and you just kind of get back in this range here and kind of get stuck in it. And you can see if I kind of bring that on out what that looks like. And same thing down here. We're just back in that range. This is a failure out the top, but we already had a close and a couple of legs down, so we could get a little breakout pullback. So I think you want to wait on a lower high. We don't really get it. It just drops on down. Comes back. You get that test, and then you get a double test with a bearish bar with enough room to get out. That's the better place to enter. And look at it drop down. And I'd measure that leg, and you pretty much got close to a measured leg there. It actually may be a little more than a measured leg. And so that's the better place to enter. Double test, second entry short, look at that low, first entry, second entry, double test of this level here, right off the high of what was the range, enough room to get out, even if it bounces there, but it just shoots right on through. And then we come back. Again, that one's tempting. But I would wait on a lower high. You get a lower high here, but that's a perfect doji. It closed above the EMA. It's the first close outside here, so you may shoot back up for a high, but draw your trend line all the same. Just see what happens, and then you come back here and you get a failed second entry long and a bearish bar. That's the better place to enter. A little reversal pattern, and it takes a while, but it just keeps chopping lower. And we bounce, we come back to the key entry point. You don't get a setup here. You got a trend line working up. You really just have a first entry, and you got a bunch of bars with stems on both sides. Wait on your next one, and then you finally get a lower high here. This is not a great signal bar. This one you could argue to almost be green, but that key entry point, and we just kind of confirmed it, and this kind of just gave you a double confirmation. You might go short right there. It really is real close to being green because it's still pretty bearish, but it's not a great signal bar. It's not a perfect signal bar. So you may wait. You get a failed second entry long here, but look how it's stacking up and going sideways. That's even though it works, it's just not worth it. And of course, you finally push through the midline, come back first entry, second entry. So you get a second entry long, right off a key entry point, fairly bearish bar. That's the better place to go short, and it drops on down. Same thing, it comes back first entry, second entry. You get another second entry short, right off a key entry point, big bearish bar. There's a trend line working up, but being a second entry and this trend line being a key entry point and a big downtrend, I'm going to take that every time. Easy trade. Notice that it does come back though and make that new high, and then it drops down again. I don't see any, you never really get a little correction here. It tries to correct, but it can't even come back until finally right here. And there's a little hidden second entry. And this is another one that, you know, it's not the greatest trade, but we finally are starting to get through that midline. So at some point, we're probably going to drop on down, you would think. And there's your chance, you know, off the EMA, second entry, hidden second entry short. Notice it doesn't break lower there, but notice you got a low, you come up, first entry short, you come up, and then there's your second entry. So there's a hidden second entry. If you went to a little bit smaller chart, what I mean by that, if you went to a little smaller chart, you'd see a clear second entry there. It's hidden on this chart. And that's not ideal, but it's still something that you want to watch for, especially in a very volatile market. So then we make a new low, you come back first entry and you go higher, and then there's a second entry short. Again, it's a kind of an inside bar, but it's a little failed break higher. Notice You kind of got a little double top, triple top if you count this one, comes straight across. So it's like a little double test. Um, you may consider that on that second entry. I think it's a little risky. Just like this one, this was the first entry. The fact that we didn't go lower here, that just makes it a little risky. But when you get the second entry, hey, it may be worth taking the risk. If you did, it works. Again, it's not a perfect setup, but it's one you might take. It does come back here and gives you a lower high, but not a very good signal bar. Just a first entry because you made a new low. It comes back here, and you do get a second entry here, but that's the kind of neutral that bar is. It's almost closes in the upper half, so it's almost more bullish. And then it actually fails, but you don't want to take the long because you're going long right into that resistance in a downtrend, which is never a good idea. So you need a little bit clearer picture that we're going to get a reversal. And then notice what happens. You push, look how strong that move is. Come back first entry, and there's actually a second entry here. And this is one that that you might consider. Again, you're coming back and you're testing that, and it's a second entry long, a bullish bar. It's a pretty good setup. It's a little risky though, so I didn't mark it. I think you're better off to wait on a higher low, which comes here, and so this would be the better place to go long if you're trying to take a little risk. But this one's still risky too, because we do have a break and a new low, but notice how we made a double top. We still hadn't made a new high or high yet, so that could happen. I mean, you got this little trend working up, and you would expect prices to try to make a higher high here. In fact, you may get two legs just like you got before it corrects again. And so that's a possibility. There's a failed second entry long here, but now you're going long into to a double top. Not a good idea. And so I just skip these trades. Big sell off here. You never really get a lower high to get in it until way down here, and you've moved too far, and then now you've got a possibility of a trend line down here. You kind of confirm it here, and you get a second entry long. Notice you're moving down first entry and then second entry, and so I like that for a long. Now you've kind of got something to work with here. You got a trend line, and you get another pull back to the trend line here, and that's basically a new low. So first entry, second entry. So if it breaks above right here, it's a failed second entry short, and you can see that it's working off that trend line now, and it's holding. So, and notice how it takes off. They trapped a bunch of shorts here with this short right here. People that don't even see this trend line. If you didn't see this trend line, you were just one of the ones that, you know, you weren't drawing your trend lines and you got trapped. And look at it go. I mean, now the smart traders say, hey, this trend line's in play. We got shorts trapped if it goes higher, and look at it go. Whoa. And where does it go? Right to the eyes. And it's pretty obvious when it comes back here and bounces, you got a midline. And so now you got to be careful getting short, especially into all that support. I don't see anything I like there. And then you get a little failed break lower. It's your first break of this trend line. And see, really, you almost would want to wait on a second entry here, but you may not get that. I mean, that's definitely a failed break lower. It's definitely a key entry point. It's a nice little bar. It's not too big. It's not too small. It's, you know, it's relatively low risk. There's, I don't know how many ticks are in that, but, you know, you're not getting a lot of small bars. That bar has 6 ticks in it. So you're not getting a lot of bars like that and like this one right here. So take what you got, and you may catch that important low of the day. And if it does go higher, I'm at least going to look for, I'd measure this leg first. I'm at least going to look for a measured leg like that right there. And you can see we don't quite get that, but I would also measure this leg. That would be my first target, and then the bigger one would be my secondary target. And you can see we basically got a perfect measured move right there based on this leg right here. So, and you don't really get another opportunity. It does come back to the midline here. That's another possibility, but it's right into a double top. It would have worked. There's just enough ticks there for it to work, but I don't like it. It's too far away from the EMA. It is off the midline, but you just had a break, and all you got to do is go 1 or 2 ticks and get a new high, which is exactly what happened, and then it sells off. So do you want to risk that? That late in the day when you've had so many good opportunities? In my opinion, no. But that doesn't mean that you couldn't go long right there because it kind of fits the rules. So this one's after 2, but notice you make that high. You try to go higher once more, and then you get a failed second entry long. You're a little bit away from the EMA. That's another one you may take, even though it's after 2, because now you've got a break, a new high, and you try to go higher 2 more times. You get a double test and a big bearish bar. You're a little away from the EMA. You may take that one. So, but you're picking tops again, so it's always suspect. But that many attempts to go higher that fail are probably going to get you a scalp at a minimum. And you may catch the high of the day right there because you had your break, you got a new high in place, and this has been an extremely bearish day. And guess what? You would have caught a nice move down right there. You basically would have caught the high of the day. So anyway, that's what I saw today. And again, there's probably other trades in there. If you saw something you liked and it fit the rules and I didn't mark it, it doesn't mean that it wasn't a trade you couldn't take. There's a little better picture from the outside, or further outside, backing up, I guess is what I'm trying to say. And you can see how strong that move was. Break, new low, and then you got your correction here that lasted maybe from 9 o'clock to a little after 10, so about an hour. There's 2 legs, and there's 2 legs in each leg. 1, 2, that's leg 1. Then there's a little correction, and then leg 1, pull back, leg 2. So there's 2 legs in the second leg. So leg 1, correction, leg 2, and off it goes again. Same thing kind of here. Leg 1, correction, leg 2. You like those sound effects, I'm sure. But anyway, I think you get the point. And if you can get a little chuckle at my expense, go right ahead there. Interesting day. It's been an interesting week last week. So it's been really volatile. Generally this time of year it's starting to slow down, and but it's pretty volatile now. So I think the market was just a little overdone. I mean, for us to be hitting 3,000 in the S&P or the ES, I guess you should say, they all mirror each other. I mean, we were overdue a correction, and a good correction would probably just be a good buying opportunity. It always is. Eventually, one day that may not be the case, but you got to go with the odds. Eventually, we're going to get a good buying opportunity, and you might even go out there and buy you a couple of options. Because the way you pick bottoms is with options. You don't be trying to do it with contracts or day trading or anything like that, because you can lose a lot of money. But if you really think that a bottom's coming or a top's coming and you want to gamble on it, go do it with some options where you're limited to your losses. And my rules basically on options is if I want to buy one, if I want to try to pick a bottom or pick a top, or I think the market's going extremely further, and I don't try to do it with contracts, because you can't sleep at night, because you can go to bed with a nice hefty profit and wake up and be your account wiped out. I mean, that happens quite often, and that's why your margin is so expensive to carry overnight trades. As a day trader, if we're out by 3 o'clock, nothing crazy can happen to us during the overnight hours, and if you're trading dailies, while the market's closed, you don't have that problem. So your margins are so much cheaper. But you can go buy a nice option, and you can sit on it, and you can be wrong. You don't have to get your timing just right. You just have to make sure you got enough time. And generally the way I will do that, if I really want to try to pick a bottom or pick a top, and I think some big move's coming, what I'll do is I'll buy me an option, but I won't go way out. You don't want to pay for a bunch of time. You want to have maybe 30 to 60 days left in that contract, enough to where you got time to be wrong. And you're only paying for 30 or 60 days. Your time is almost expired, so you're not paying for a lot of time. You're just paying for the right to exercise a contract or two, or however many you want to buy, and you can make some money that way. And that's how I recommend doing that. Don't try to do it with contracts. Don't try to do it day trading, because if you try to pick tops and bottoms, it's hard to pick the time. And you can know about when it's coming, but you still may not know to the day, and you may miss it by a week or 2 weeks. But if you've got 30 or 60 days to be right, it's a whole lot easier. So think about that. And I didn't mean to get off on that tangent. I didn't mean to, I'll probably get a million questions about options now, but you can read up on options and how they work. And if you want a few more details, feel free to ask, and I'll try to share them with you. But anyway, I'm done for today. I'm going to wrap it up. We'll be back again to do it tomorrow. Actually, before I forget, there's a possibility that there won't be. I'll probably still be able to do a chart lesson on Wednesday, but I probably will be out of the office Wednesday morning and not trading. Um, I have a eye doctor appointment, not with my surgeon that did my retina detachment issue, but I've got an appointment with my local eye doctor because my prescription's changing, and they said it will probably change quite a few times between now and the next 6 months. So I have to go get a little adjustment on my glasses or contacts or whatever I'm gonna wear. So I'll probably be out Wednesday morning, but I doubt I'll be gone the whole day. So I'll probably still do a chart lesson, so it may not affect anything for chart lessons on Wednesday, but there is a possibility there may not be a mid-morning chart. So I'll just have to see. I'll remind you about it tomorrow, and when I have a little better idea of what's going on. I guess I really won't know a whole lot more until Wednesday morning, but I'm pretty sure I'll be out Wednesday morning and there will be no mid-morning chart. So, but I feel certain I'll be back in time to maybe trade an hour or two and even do a chart lesson in the afternoon. So that's kind of the plan at this point. So just a heads up. Anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.